Hey traders, what's going on? Jamie Setley here. It is September 24th, 2020, and we're going to take a look at some of the bigger, more popular markets, excuse me. We'll look at the dollar, that is DXY. We'll look at euro real quick, which is just, the inverse basically of DXY, and then we're going to look at gold. So actually, let's start with gold. So we've been spot on with gold, identifying the peak back here in August, identifying the peak here as a triangle wave B, with this being A, B, and then looking for C wave lower. Final targets for a C wave are where you've got A and C that are equal, and that's going to be 1769. Just below there, of course, 1754, which if you look to the left of the chart has been a pretty important spot for many months earlier this year. 1807 is also a level to be aware of. These are essentially, this is a long-term parallel. If you've been following the longer-term charts and the updates, then you'll know what that is. But basically, just pay attention. 1807, 1754, 69. If you do bounce a little bit more here, which you certainly could, given that we took out that wave A low and probably wiped out some longs, I would look at 1908 resistance. Okay, much above there, and you'd actually have to consider that this whole drop is complete, especially because it is in 5 waves for that proposed C wave. All right. So again, in summary, dollar or gold still thinking lower, but certainly could bounce a bit before heading down to these levels. And the big levels to pay attention to are down here. We have other reasons to suspect downside before we get a bigger low, including seasonal tendencies and the wonderful, amazing analog that we've been following since last December, which continues to play out perfectly. And again, if you read the updates at scandex.com, you'll know exactly what I'm talking about. All right, let's go to euro. That's not euro, that's DXY, sorry. Okay, so DXY, we bounced when we should have. No one else, everyone thought we were crazy for being bullish dollar and bearish euro, essentially starting over here. Did take a while for us to finally turn up, but we have. We've reached a level that's kind of important, though, on a near-term basis, and that is where the DXY rally consists of 2 equal legs up. You can see here that is 94.61, which was just about today's high, 2 ticks shy of that, and we're pressing up against the channel resistance, which again has confined the entire downtrend since March. So, if you are, long dollars and you might want to be taking some off here to, preserve. Don't want to draw down your gains too much, right? So might want to be scaling out of some stuff here and then see what happens if we pull back some. But if we do pull back some, I would be looking at those former highs. Going to be in like 94 and about 93.65, right? Former resistance. Watch to provide support at this, now, if that happens, before we go for a breakout attempt. Bigger picture, by the way, I still maintain that you could get, I got to bring in a longer term chart here, that you could get, this is a daily, that we're still looking at a bigger rally. Several reasons why. One, if we go to a weekly here, I mean, look, where we bounced from and found low back here, it's just huge. I mean, this is a huge level. And essentially, this week's rally is the first, any meaningful upside. We're just now breaking out of the short-term base, okay? Not saying we can't struggle for a little bit here. In fact, I think we do. However, huge level, channel level, et cetera, et cetera. It just makes so much sense to me for us to get back towards that long-term red center line, which was support before the big breakdown. So you want to go back to where you found support in the first place and see if that provides resistance, aka polarity, right? Also, if we were to get back there over the next, say, a couple weeks or something, I don't know, maybe longer, you're going to be near the 200-day average anyway, which would be a natural level for us to pivot. So, irrespective of what happens over the next, say, few days, I do maintain that the dollar is higher, probably into that 96.50, 97 area over the next couple weeks to month or so. All right. So that is that for dollar and gold. Real quick, let's see if we can peek euro. We'll take a very short-term view. So we were thinking bounce near 1630. That did happen. That was the center line essentially. At this point, if you do bounce, you've got a relatively wide zone of say 1720 to say 17, maybe 70 or so for resistance. Hold on, this is on. Oh, there we go. All right, sorry. Okay, that's better. 17, yeah, again, 1720 to 1770 for proposed resistance. And my downside levels of interest are still essentially 114.50 to 115. 115 is that old high over here, right? That's from March. So DXY has already actually pretty much tagged that level, but Euro's been a little bit stronger than DXY has been weak. The other thing here is if you don't bounce much and you get back below here, the center line, okay, below the center line is acceleration, downside acceleration potential. So that's one of the key tenets of median line analysis. Once you break a median line, you tend to accelerate in that direction. In this case, that would be down. So, you'd be looking for a very quick drop, maybe of 150 points or so down to the bottom of the target zone. All right. So again, that's it for me today. Quick update on gold, euro, DXY, and some good levels here that we've reached. And have a great rest of your week. All right, take care. Bye.